Everyone should brand themselves online. I think you should have your own personal brand, your own website that tells your story because you attract like-minded people and you attract these opportunities you would never have thought about in the past. Just having this day job where you work 7 a.m. to 7 p.m. is not enough. You gotta like wake up at 5 a.m., work on your side hustle passion project from 5 to 6:30 a.m. because one income is too dangerous in this day and age.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for jumping into yet another episode of the Freedom Point. I'm so glad you're here with us again today. I've got another amazing guest. I've got Sam Dogen on the call. Sam, welcome to the show.
Hey, Jeremy, thanks for having me.
Yeah, absolutely. Looking forward to chopping it up with you today. Sam founded Financial Samurai in 2009 and is the USA Today best-selling author of Millionaire Milestone. Sam's a pioneer of today's financial independence movement, and he previously worked at Goldman Sachs and Credit Suisse, from which he retired at the age of 34. Sam, I'm not doing your bio justice. I know there's a lot more to say here, but could you maybe give our listening audience a little bit more understanding of Sam, your journey, what you're focused on today? And most certainly, we would all love to know, how is it that you retired at the age of 34?
Well, I grew up to U.S. Foreign Service parents. I was born in the Manila, Philippines, lived in Manila, Kobe, Japan, Taipei, Taiwan, Kuala Lumpur, Malaysia, and then I came to the United States for high school and college. And so during that time, I was like, wow, I would like to be rich because seeing so much poverty around in the world was really kind of disheartening and impactful to me. I had friends who were living in studio apartments with their brother and parents, and then I had other friends who were living in these mansions in the hills. And so I decided, well, best to try to make some money, and what better occupation than that is than to go work on Wall Street. So that's what I did after graduating from the College of William and Mary in 1999. And then I soon realized, wow, this was a rough job. You had to get in at 5:30 in the morning, leave after 7:30 p.m. every night, 60, 70 hours a week, lots of stress, lots of pressure. And I told myself, I don't think I can last like my parents who worked in the government for until they were 60. So I decided to save every other paycheck. So we got paid bi-weekly. So I was saving 50% of my income. I was living in a studio apartment with a high school friend of mine. So we're living very, very cheaply. And then I decided to invest about 95 to 100% of my bonus if I had one every single year. And so I said, okay, I want to leave by age 40. I could do 18 years of this grind, kill my body, lose all my hair, go gray, all that good stuff. And then I'll spend the back half of my life healing. But lo and behold, I was able to leave at 34 because I was able to figure out a way out. And that was by negotiating a severance package that paid me out 5 to 7 years of deferred compensation. So at 34, I was like, well, getting that severance package was kind of like buying 5, 6 years of time. So that's the short end story.
No, I appreciate that background. So, I just want to talk through this a little bit more. So you walk away from a high paying job at the age of 34 years of age. What mindset shift allowed you to really let go of such a prestigious identity that you had built up in your corporate career, to be able to now pursue freedom?
Yeah, well, the easiest way to kind of see your future is to look at your bosses and ask yourself, do you want to live your boss's life? Go through what they're going through, make their money, live their lifestyle, but also go through their stresses. And my immediate answer was no. I had bosses who were going through divorce. They were always upset. They had all the money in the world, but they didn't seem happy. They were still at the beck and call of clients, you know, taking phone calls on Saturday evenings, missing their kids' games, all that stuff. So I had to make a decision. Do I want to go that route and try to make more money that would not bring me more happiness or be happy with what I had? So I had a target goal of retiring with a net worth of 3 million. And when I got there, I decided, well, maybe it's not enough, right? Like I want more. But it was really being able to negotiate a severance package that gave me a lump sum severance and all my deferred stock and cash compensation over the next 5 to 7 years that really made me say, you know what? 3 million is enough. I could make more, but I'm not happy. I need to go and choose my life now. I'm 34. Worst case scenario, if my writing on Financial Samurai doesn't work out, if I'm sick of seeing all the Gothic churches in Europe, then I'll just come back to work after 2, 3 years. And I haven't been back since.
So you often write about, this kind of difference between, being rich and feeling rich. Can you kind of talk through what the differences are there, and kind of this, shape on what people perceive wealth to be?
Mm. Well, rich, I feel feeling rich is more important than actually being rich, funny enough, because I have many friends who are centimillionaires, a couple billionaire people I see around and hang out at the tennis club. And I don't see them as happier than the normal millionaire or the normal person who has enough. And so I think feeling rich is important. And I felt rich when I came to America at 14 because I saw perspective of poverty overseas. So when you see poverty and you're not impoverished, you feel fortunate, you feel appreciative. And so almost every day since high school, I felt appreciative because I also got in trouble in high school. And I got in trouble with the law, I got suspended. And I often asked myself, I was like, am I ever going to get a job? Am I going to get in college, first of all? And then after that, am I going to get a job to live my life? And so I was able to get in college, get a job, and leave. And I just felt rich because of the poverty that I saw. Now, being rich is just numbers. If you feel, what is rich to you? Well, top 10% income and net worth, that's probably rich. Top 1% income nowadays is about 600,000 plus, and a top 1% net worth is about 13 million plus. That's technically rich. But you don't have to have those numbers to feel rich.
Yeah, it makes total sense to me. It reminds me of back when I was in college. My wife and I would travel over to Mongolia to
Oh.
teach English in a university setting, right? And that was the end of the earth. But the people there had so much joy, right? It's
Yeah.
almost as if they felt, much richer, than our Western culture here in the United States. Um, I'd like to address this kind of topic of what role fear plays on a journey to financial independence. How is it that investors can learn to manage fear when it comes to, investing and, securing this kind of financial independence or freedom that you talk about, instead of just avoiding the fear altogether?
Yeah. Fear is such a fantastic motivator for change. I started Financial Samurai in July 2009 because I was afraid of getting let go. I lost about 35 to 40% of my net worth in 6 months that took 10 years to build. And the thing is, I came up with the idea to start Financial Samurai in 2006, but I didn't do it because I was lazy and I just wanted to do something else. But that fear motivated me to change. So with investing, I think to conquer your fear, you have to understand some basic historical numbers. For example, 70 to 75% of the time, the stock market goes up. Since 1926, the average return, total return is about 10% a year. So we know with those metrics, okay, we have a good chance of making money if we invest. So when you see a 10% correction or a 20% correction, you're going to fearful. But you also know that these corrections come every several years, and we know that the average bear market is about down 35%. So you just run the numbers. You say, well, if it's down 20%, like after Liberation Day, and we blow ourselves up, well, What's the downside risk? Maybe another 10, 15%. And then you start modeling out and start investing in tranches. You got to know the statistics, and then you start investing according to those numbers and your goals. So we all know that there's no riskless return, right? You have to take risk to get reward. Otherwise, you're just going to invest in the 10-year bond yield, the treasury bond market. So you just have to know the data, and then you have to come up with a plan, and then you have to invest accordingly.
Yeah, it makes total sense. It's amazing what happens when you look at a graph and you just zoom out a few years, right?
Yeah.
Depending upon the investment, of course, if it's directly correlated to Wall Street and maybe it's an index fund or something of that nature, it almost always goes up and to the right if you zoom out far enough. So I appreciate you sharing that. I know that you've built, Financial Samurai into a passive income machine. What advice would you give to someone looking to monetize a passion project in the same way
Mm.
that you have?
Well, first of all, Financial Samurai is definitely not passive because the articles don't write themselves. The occasional podcasts don't record themselves. So let's just change that viewpoint. It's a passion project. I love doing it. I spend about 15 hours a week writing, responding to comments, and editing. And I think it's important, especially with AI now, that everyone should brand themselves online. You can go on social media and all that, but I think you should have your own personal brand, your own website that tells your story because you attract like-minded people and you attract these opportunities you would never have thought about in the past. Um, it's super important because I think AI is going to crush the job industry. It's going to crush job opportunities for college graduates, young folks, and middle managers. It's going to be really difficult. So you need to figure out how to brand yourself online. I think build a business around yourself or some kind of idea that you have, and also leverage AI. It's just having this day job where you work 7 a.m. to 7 p.m. is not enough. You got to like wake up at 5 a.m., work on your side hustle passion project from 5 to 6:30 a.m. or from 10 to midnight because one income is too dangerous in this day and age.
Yeah, it makes total sense. I mean, I'm glad that you highlighted the importance of, really your stock price, I call it, right? And that's your brand, your individual brand. And I tell this to my teenagers all the time, that you're building your individual brand, one drop at a time. But you can certainly lose the whole thing in one big gigantic bucketful, by or a poor decision. So, I think it's also important for people to understand that oftentimes, people get into their, we'll call it their 30s, their 40s. They realize that they have this entrepreneurial itch that they want to scratch, right? And in some cases, there's a lot of transferable skills that somebody can take from corporate America and apply to small business ownership. But one big important component to that, outside of the transferable skills, is are they able to carry their brand over into what their next potential, either side hustle is or their next business venture. So, any further comments that you want to share in that regard, Sam?
Well, I think company loyalty both ways is kind of dead, unfortunately. You've got to look out for yourself. It's a ruthless world out there, super ruthless, and I think people realize it, but I don't know if they really realize it, partly due to globalization. You just look at, for example, China coming out with DeepSeek and that AI model that's much cheaper and quicker to execute, and then you saw the market freak out here. So the world is getting smaller and more competitive. We are a rich country, rich nation, and people see that all around the world, and they say, well, we're just going to work harder, innovate faster. Maybe we're going to compete illegally. I don't know what they're going to do, but it's coming for us, and we got to be prepared.
I'm Zach Captainstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investor. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
Yeah, makes total sense. Appreciate your perspective there. I know that you talk about this topic a lot. I know that you've written books on this topic as well in the past. In your experience, what's the most reliable forms of passive income and which ones are the most overrated?
Well, the most reliable is the 10-year Treasury bond yield. Treasuries are sovereign. They're not going to go bankrupt. It's riskless. You don't have to pay state taxes on it. Right now, well, in 2025, you can get 10-year risk-free yield at 4.5%. 30 years, 5%. Inflation rate is about 3%. So you have a real return of about 2%. And so I wouldn't sleep on Treasury bonds paying you this nice, cushy, wonderful income. I think maybe dividends might be a little overrated, although investing in dividend stocks is one of my favorite ways to earn passive income. I think what people don't realize is that the dividends you receive is not free money. So pretend you're a company, you got to pay dividends out of your balance sheet, right? Your cash hoard. So when a company pays that dividend, the cash balance goes down by the amount that the dividend is paid. So it's not free money. The only reason why the stock doesn't drop by the amount of the dividend paid is the investor's belief that the company will continue to generate cash flow and pay dividends, right? So just be careful of just thinking dividends is free money from stocks. I think on the flip side, rental income maybe could be underrated. It's not passive. I would say it's semi-passive. If you get great tenants, it could be very passive. But the income you generate from your rental property is almost like free money minus the wear and tear and the cost, right? Because unlike stocks, it's not paying from a cash hoard. The property is just depreciating at the point. So I think people underestimate the power of real estate because it can ride inflation and then it forces you to force save. And if the rent goes up with inflation and the property tends to ride the inflation wave as well.
Yeah, I think so too. I agree with you wholeheartedly. Obviously, that's one of the messages that I, continue to carry forward to my own personal investors that I'm aligned with, as well as my own investing strategy overall. I think if real estate is not part of somebody's overall portfolio, it ought to be. It just really depends upon, how active, semi-active, or passive, they want to be in that type of a strategy. I know that you emphasize as well that most people chase income. You emphasize more a strategy of buying back your time. Can you talk to us a little bit more about kind of your mindset around, money evolution, once, your passive income became a point where it really was able to cover your daily life expenses?
Yeah, it's interesting because I think we should all try to generate enough passive income to cover our basic living expenses or have enough in investable assets where at a reasonable 4% or maybe even 5% withdrawal rate, it can cover our expenses. The problem I see, and I've lived in New York City and San Francisco since 1999. We are cities of go-getters, type A personalities. We build, and there's just never enough money to make. It's just endless, right? The person with $1 million is envious of the person with 5 million, one with 5 million, envious of the person with 10 million, and so forth. I have friends who are 100 million, they're envious because their other friends are now billionaires, right? It just doesn't end. So you have to really be disciplined to say at a certain age, at a certain net worth, I'm out, or I'm going to do something that I really enjoy. Because I think too many people spend way too much time doing something they don't enjoy for status and money they don't need, and then they end up dying with way too much and wasting all that stress time when they look back on their lives.
Yeah, why do you think that's the case? I'd like to double down on that for a minute, Sam. Why is it that so many people are kind of chasing after, a bigger paycheck, a bigger nest egg, when we all, at the end of the day, we all know that the clock is ticking, right? We're all going to die at some point, right?
Yeah.
If the average life expectancy, whether, depending upon if you're a man or a woman, is 76-ish, right? We all know that that day is going to come. So why is it
Mhm.
that we all feel like we need to amass, seven figures or eight figures or more and just keep grinding, out a paycheck while we're well into our, late 50s, early 60s, et cetera?
I think part of it is comparison. You always want to keep up or outpace your peers. Another is inertia, where you're just used to doing the same thing over and over again, and it's hard to break free. And breaking free is scary. Change is scary. Other thing is, I think people don't have a plan B on what to do next after, grinding out their terrible job for 10, 20, 40 years. And so you have to be really intentional. You have to be intentional with saving, investing, and coming up with a net worth target by age. And then you have to be intentional with getting the heck out because that one more year syndrome is going to snarl you and trap you for years and years to come. And then you wake up and you're like, well, what did I do with my life? Did I spend 40 years try to optimize a like button to get more people to click on the social media page to like get them hooked on this and that? I mean, you got to really be intentional with what you want to do with your life.
Yeah, it makes total sense to me. I heard it said once that the one greatest regret that somebody has on their deathbed is that they cared too much about what other people think. And I think
Yeah.
a lot of people that are trapped and stuck in corporate America, afraid that they're going to let somebody down, right? And so they don't feel like they can get off the hamster wheel and go live the life, that they want to live based on their own personal design, right?
Yeah.
Because they're afraid of letting somebody down, which I could totally respect and understand. So now that you've achieved, what many dream of, Sam, and you don't look to me like you're that old of a guy right now. What keeps Sam mentally sharp and motivated today?
Well, I'm 48. It's been what? Many years, 13 years since I left Wall Street. And it's amazing. So before leaving my day job, I didn't have kids, and partly because I was too stressed. I probably just didn't have time for it. I felt like didn't have enough money. And I have two children, 5 and 8, and they're amazing. They take a lot of time and energy, but it's awesome. And you see them grow up, and so I am so happy to have this freedom to be able to spend time with them, take them to school, pick them up, spend every single weekend with them. It's awesome. We're gonna do 5 weeks in Honolulu. I'm ready. I'm ready for all in dadhood. And while they're sleeping at 5 a.m. or 6 a.m., I'm writing, and I've been writing very consistently every week, 3 posts a week on Financial Samurai since July 2009, and it's just something that gives me joy. It's like an intellectual stimulation. There's always something going on, right? Whether it's a Liberation Day or a war in Ukraine or I don't know. This is just endless stuff, and it's so fun to think about, conceptualize, come up with a thesis, and actually take action with the money that you have. Sometimes you're going to invest and you're going to lose money. I was buying the dip in March and I felt like a fool for like 3 weeks in a row. I was like, this is crazy. But I kept on buying the dip in April. I was like, gosh, thank goodness we're like not going to go off the cliff together. And so it's just pretty fun and it's great to like connect with people online who are just like-minded and who have intellectual similar curiosities as you.
Yeah, well, I definitely have a very similar intellectual and curiosity that it sounds like you do, Sam. And I am just like you in that regard. I like to tell people that I quite enjoy catching a falling knife, and I like it much better when I catch it on the handle, right? It's interesting what happened in March of this year. It was so reminiscent of what was happening in March of 2020. And I remember specifically to the day, March 16th of 2020, I went all in and doubled and tripled down on buying stocks. Okay.
Nice.
That day was the bottom of the market cycle.
Well, congrats on time at the bottom.
Exactly, but I think the adage is when you see a lot of fear and panic in the markets, whether that's public markets or it's private equities, right? That's usually the time, right, for people like you and I that are maybe sitting on the sidelines to get a little bit greedy, so to speak,
Mm.
when there's fear in the markets. Do you agree?
Oh yeah, I definitely agree. And it never feels good buying when the markets are going down. That's the I every single time since 1997, since the Asian financial crisis. Buying then, 2000, trying to buy then, and you're never going to time it right unless you're you. But like I can never time it right, but I'm just dollar cost averaging down, 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 and you feel bad. But eventually, I don't know anybody who's bought the dip and who's lost money if they've held on for the long term.
Now, what I didn't tell you is back in my college days, I was day trading stocks, and this was during the dot-com days, okay? Trading stocks, not only with my college tuition, but also on margin. And
Nice.
when that bubble burst, those losses were accelerated. So I'm not a genius when it comes to Wall Street investing, but I, like you, do enjoy a short-term, market cycle correction, and typically will view those as an opportunity, to be an opportunistic investor and deploy
Sure.
additional capital. So, Sam, what's up next for you? How can we connect with you to learn more about what you're up to, etc.?
Well, if you want to buy my USA Today national bestseller, Millionaire Milestone: Simple Steps to Seven Figures, you can go to Amazon or anywhere that books are sold. If you want to connect, I've written over 2,500 articles on financialsamurai.com since July 2009. So just leave a comment on any article. You can search for any term and add Financial Samurai. You'll probably find something where it goes really in depth into the topics, really try to highlight the pros and cons. And what's next? I think, well, we're going to go to Hawaii. We're going to chill out for a couple months. No, 5 weeks, 5 to 6 weeks. And then I'm going to start thinking about my next book because one of the great things about writing a book when you have young kids is that you can show your kids that you're creative, you come up with a concept, and you have a final product you can show them and go to the bookstore and find. I think that's one of those things that's really motivating to me because if you can show them you're being academic, how can they not be academic themselves and focus, right? So this is like I'm totally thrilled for the next 2, 3 years.
That sounds great. Well, you sound to me like you're a kick-ass dad, Sam. So
Thank you.
you got it. Well, I really appreciate the time that you've spent with our listening audience today.
Hey, thanks for having me, Jeremy.
Absolutely. And listening audience, thank you again for jumping into yet another episode of The Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.